You can move it. It's easier to store. You can transact in it quickly if that's a decision that you're going to, the world goes in.
Yeah.
And gold is something you can't do any of that with. I'm not betting against gold, though, by the way. Gold has a 5,000-year track record. So I'm not going to be this supercilious, arrogant person that says, gold has been put out to pasture by Bitcoin. I do believe that there will be people buying gold 100 years from now and perceiving it as a store of value. All I'm saying is that Bitcoin is going to mature as an asset class, and it's going to make that transition.
Anthony Scaramucci, a Wall Street expert, discussed Bitcoin's potential, citing its 2020 rebound, unique technical qualities, and institutional investment prospects. He expressed humility on long-term valuation, estimating $350,000 to $400,000 if it reaches half of gold's market capitalization, and predicted increased ETF-driven institutional adoption. As these factors align, Bitcoin is expected to become a more integral part of global finance, offering diversification opportunities and potentially substantial returns for those willing to navigate its fluctuations. Additionally, technological advancements, such as improvements in scalability and transaction speed, could enhance Bitcoin's utility as a medium of exchange. With increasing public awareness and acceptance, Bitcoin might evolve from a speculative asset to a core component of diversified investment portfolios across the globe. Anthony Scaramucci indicated that as a Bitcoin observer, he'll keep a neutral attitude. He remarked on Bitcoin's 2020 crisis and comeback, fueled by stimulus money. Scaramucci stressed the IRS's definition of Bitcoin as intangible property, which protects property law, citing its expansion to 80 million wallets. Scaramucci credited Sam Bankman-Fried with exposing fraud at companies such as FTX and Celsius. Let's watch clips from the interview for further insights into this discussion. Please like this video, subscribe to the channel, and turn on post notifications for more exclusive content. Enjoy the video.
I'm going to be a Bitcoin observer. I'm not going to do what other TradeFi people are doing, which is slamming or being ridiculously critical of Bitcoin. I'm just going to be an observer. And then in 2020, when COVID happened, and I think Bitcoin crashed to like 6,000.
Right.
And I was watching it, build a base. And then I think, frankly, the stimulus money did help Bitcoin.
Oh, absolutely. I mean, that was the beginning of the rush.
Yeah, a lot of money went into Bitcoin. And when I saw the activity, I started writing down some notes. I said, okay, Bitcoin gets to 100 million wallets. If I'm comfortable with the regulation, if I can store 9 figures of Bitcoin safely somewhere, I can't put it in cold storage, but I got to put it, and I ended up putting it at Fidelity, then I'm okay. And I think we were at 80 million wallets. You'd have to take a leap of faith on regulation, but I made the case that I told my clients that the IRS decided it for me with Bitcoin. So you'll recall that the IRS said that Bitcoin was intangible property. And so one of the things that you learn in property law is that in the United States and places like Great Britain, property is sacrosanct. They can't really take your property from you without giving you some value for it. That's been a sort of a right dating back to the Magna Carta in 1215 AD, King John. So I looked at that and said, all right, these regulators, they're not going to be able to take your Bitcoin away. The court system, the Constitution, all these things are protective features. And obviously, you get these autocratic regulators like a Gensler or an Elizabeth Warren. They think they know more than you do, or they think that their decisions are better than your decisions. Those are sort of people I generally can't. Bitcoin go from 69,000, I guess, to 16 or wherever it ended. But I think Gensler did all of us a favor. I don't think he wanted to do us a favor.
Probably not.
But I'm going to explain to you why he did us a favor. He flushed out FTX. He flushed out Celsius, which we were talking about. 3 Arrows, BlockFi. Everything that would have benefited from a Bitcoin spot ETF approved in the first quarter of 2022 got knocked out of business. Over leverage and fraud literally got wiped out of the system.
Right.
And if he had approved it earlier, we could still potentially be living in an FTX world right now, And that fraud would have just been mushrooming and growing and becoming more massive. And it could have been more colossal in terms of the damage that it caused in the industry.
How do you think that would have affected things if we would have had the ETF already approved at that time?
Well, you see, I think there would have been a floor on the price of Bitcoin. And there would have, look at the buying. Okay, you've had consecutive steady net inflows by and large. I mean, there's been a few days, I guess, where there hasn't been, but BlackRock has had a consecutive net inflows the entire time since it was created. And so I think there would have been a floor. So I don't think, even if fraud was exposed at FTX, he could have probably covered his tracks better.
Right, because of the liquidity in the market.
Correct. He would have had more balance sheet, and he would have probably started moving the shells more quickly.
Anthony Scaramucci demonstrated Bitcoin's transportation and storage convenience over gold. Scaramucci emphasized humility over Bitcoin's long-term potential, stressing unpredictability. He hopes analysts like Tim Draper and Saifedean Ammous are right. Scaramucci predicted that Bitcoin may reach half of gold's market capitalization, with an asset value ranging from $350,000 to $400,000. Anthony Scaramucci questioned Plan B's stock-to-flow concept, noting that ETFs may bias it. Scaramucci, a Wall Street insider, projected increasing institutional investment in Bitcoin via ETFs. He highlighted the untapped pool of trillion-dollar assets that may enter the market. Scaramucci expects financial advisors to advocate Bitcoin for distinctiveness and diversity as portfolios incorporate Bitcoin. Let's go back to the interview and watch more clips to gain insights from Anthony Scaramucci.
And he was like, Anthony, I've heard you on TV. You say that Bitcoin is digital gold. And I said, yes, Sheikh, I have said that. He said, well, you know what? It's better than gold. He says, let me tell you something. I have a USB. It's about this big. It's about the size of a quarter. It's got $200 million of Bitcoin on it. Right now, everybody here in Saudi Arabia and leadership, they love me. Okay, but someday they may not. Okay, and let me tell you, I'm gonna put this USB where the sun doesn't shine. I'm gonna be heading for the Yemeni border. Okay, and you can't move $200 million worth of gold like that. And I mean, he put it fairly succinctly and
that simple
and plaintively. But I mean, that's one of the big reasons why this is going to be with us for our lifetimes.
Where do you think Bitcoin will end up long term?
So I'm not smart enough. I hope Tim is right. I hope Saifedean Ammous, the Bitcoin standard writer, is right. But I'm not smart enough. And all I'm saying is it just has to trade to half out of its value in the last 4 years. It has been the world's reserve currency for their entire lifetimes, dating back to the Second World War. And so if you're a dollar-centric person, you may be a little blindsided to that.
Right.
If you're living in Africa or you're living in Latin America where they punish the money way worse than we do here in the West, we do our requisite share of punishing the money, but they do way worse job down there. And so, then you say, okay, maybe Draper's going to be right. I would love to have him be right, but if it's just half of the market capitalization of gold over the next 10 years, a $70,000 asset goes to $350,000 to $400,000. And I think there's a margin of safety in it. I love Plan B, and I've interviewed him. He's been on my podcast. He's friends. But I think the real question is his stock to flow model or other technical models being skewed by the ETF? And so I think the answer to that is yes, because I'm a Wall Streeter. And so what do we know about Wall Street? Wall Street sells product. Okay, right. Product is sold on Wall Street, not bought. Fidelity, BlackRock, ARK Asset Management, they enter the ETF space. They've got people picking up the phone, calling consultants, calling asset managers, calling garden variety wirehouse financial analysts and saying, or financial associates, and saying, hey, please, Mr. Financial Advisor, buy 1% allocation to Bitcoin. Do it through our ETF. It's low cost. We'll store it for you. It's got a QSIP number. It can go right on your client statement, et cetera, et cetera. And so what Wall Street does is it gins up this huge selling machine. And you're seeing that right now in a very small way.
Right. Because
wirehouses haven't come into it. Registered investment advisors haven't come into it. large-scale institutions have not really started buying it. Now, granted, there are sovereign wealth funds in the Middle East that have started buying it. But by and large, there's an untapped pool of several $1 trillion of assets that could enter the space. And if that happens, then me saying that there's a 50% market capitalization of gold will be very low. But I just want people to recognize where we are right now. Remember this, if you're a consultant and you want to differentiate yourself from your peer group, you're going to recommend Bitcoin.
Absolutely.
Because you're going to want your client to get invested, right? You want to get your client off zero.
Right.
You're not going to say put 20% of your money in it. But you're going to say, we want to have a 1 or 2% exposure. And now you put pressure on all these other portfolios, right?
Right.
Because remember, these guys, like I said, it's like a match sailing race. They all get in an index. They hover around the index. So if my index has Bitcoin in it and yours doesn't, and I'm doing better than you because mine has Bitcoin in it, what do you think is going to happen?
Yeah, people are going to gravitate toward the one that...
Scaramucci emphasized Bitcoin's unique technical qualities and uniqueness from gold. Despite Bitcoin's ascent, he recognized gold's 5,000-year history as a store of wealth. Scaramucci envisioned future analysts acknowledging Bitcoin as an established asset class, possibly referring to it as digital gold. Historically, Bitcoin's price has risen dramatically following each halving event. A close below $48,000 would invalidate the chart analysis of veteran trader Peter Brandt, which served as a significant tipping point for his forecast. This level provides significant support for Bitcoin's present price. Keith Allen, co-founder of Material Indicators, has a similar prediction, although with a slightly lower aim. Allen predicts a price between $125,000 and $130,000. However, he is unsure of the time frame. Analysts agree that Bitcoin's upward trend will continue, with 2025 predicted as its next macro peak. Various estimates and projections have developed, with some predicting $275,000 per coin by the end of next year. CryptoCon's model, which emphasizes Bitcoin's initial halving event in 2012, predicts highs in 2025. This model shows that Bitcoin's price movement is driven by halving occurrences, which reduce the block reward and may increase demand. Bitcoin's price has been stabilizing below all-time highs for several months. Brandt sees this consolidation as a minor stop in the overall trend. Some predictions have failed to come true, such as calls for new highs in September. Despite this, many are still enthusiastic about Bitcoin's long-term prospects. Brandt's prediction is consistent with the larger view that most of Bitcoin's bull market gains are still ahead. What do you think about Anthony Scaramucci and Peter Brandt's predictions on Bitcoin's future value? Do you believe Bitcoin will reach $350,000 in the next few years? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching.